Hello everyone out there, how are you all doing? I'm Kate Hill and I'm here to give you as always the best, unbiased and honest commentary about our property markets, along with some fantastic hints and tips as we go, so stay tuned for all your latest property news. Now, as it's Christmas, you're going to have to forgive me for more shameless self-promotion, guys. Just giving you the heads up on my new book that I've got coming out. It really is a must-read for anyone who knows a lady keen to turbocharge her financial future. It is a book, a property investing book, telling you not just that you should invest, there's lots of those, but how you should do this, real practical advice. The link to pre-order is in the description below. Okay, got that over with. Bringing you some stats for the year. CoreLogic report that in the year to November, Australian rent values increased 9.4%, which is the strongest annual appreciation in rents since January 2008. Gross rent yields continue to trend lower through November, reaching a new record low of 3.23% nationally. Gross rent yields are at record lows across most of the capital city dwelling markets, with the exception of Hobart, Perth and Darwin. Dwelling approvals fell 12.9% through the month of October, having trended down since April 2021 as home builder grants came to an end. The monthly decline was driven by a 36% fall in unit approvals, while detached housing approvals saw a 4.5% uplift. There are a lot of units being built everywhere. I feel like I see cranes everywhere I go, which is obviously not very far at the moment, but nevertheless. Total housing finance secured for the purchase of property fell for the third consecutive month in October by 2.5%. Total lending has fallen 9.2% since it peaked in May 2021. New owner-occupier lending fell 4.1% over the month, while investor lending was 1.1% higher through October. Nationally, investor finance comprised 32.9% of new mortgage lending through the month of October. Across the states, the largest increase in investor participation was seen in South Australia, would you believe, where investor finance jumped 31.9% of total lending, up from 28% the previous month. As a total percentage of finance commitments by state, as you can see here, New South Wales, Queensland, the Northern Territories and the ACT lead the charge. The Reserve Bank held rates steady through December. Average new housing lending rates for owner-occupiers have held at 2.37% for 3 months to October, suggesting that new rates for owner-occupiers may be bottoming out. Following on from that story, the RBA has reiterated that it does not intend to lift interest rates next year, despite growing industry speculation of a rise. We're reading it all over the newspapers. At the final board meeting, the RBA left the cash rate at 0.1%, and the Governor, Philip Lowe, announced that the latest data and forecasts did not warrant an increase in the cash rate during 2022. He said that despite the emergence of Omicron, leading indicators point to a strong recovery in the labour market. Job ads are at historically high levels. Everyone I know is hiring, and wages growth has picked up because everyone is hiring and there are very few candidates out there. The emergence of the Omicron strain, he says, is a new source of uncertainty, but it is not expected to derail the recovery. The economy is expected to return to its pre-Delta path in the first half of 2022. He stated that the board will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. This will require the labour market to be tight enough to generate wages growth that is materially higher than it is currently. Now, again, following up from our first stories, investors are borrowing big to buy real estate as first home buyers take a little bit more of a backseat, but the market share of investors remains below historical averages. ABS lending indicators show loans to investors rose to $9 billion in October, the highest amount recorded in 6 years, and more than double the recent low point of $4 billion at the start of the pandemic back in 2020. ABS Head of Finance and Wealth says that the value of new loan commitments for investor housing has grown for 12 consecutive months. While the value of investor loan commitments has grown 90% over the past year, the number of investor loans only accounted for 33% of all new loan commitments in October. Now, the number of investors entering the property market has increased, but it is not keeping up with those leaving the market, leading to a real shortage of rental properties. An exodus of property investors in previous years has resulted in the largest shortfall of rental homes being in 7 years. There are about 20,000 fewer rental properties being advertised nationally compared to 5 years ago. That is a lot. Since 2015, investor participation rates in this country have been well short of the actual demand. The outcome is vacancy rates below 1.5% in 6 of our 8 capital cities, and in most regional areas it is even lower, and rising weekly asking rents. So of course, competition for rental properties is higher than ever, with the national vacancy rate, as I say now, just 1.5%, most cities well below that level, and in regional areas it's even worse. Renters are expected to find it even tougher when our international borders reopen and international students and migrants return. Now, we are predicting a dramatic impact on vacancy rates once those borders reopen. Rental demand will climb, reducing the already limited proportion of vacant homes and pushing prices beyond already record highs. I will keep you posted on all things property from around Australia as our year progresses. It's nearly over. Don't forget to pre-order my book. Don't forget to hit that subscribe and like button if you are enjoying the free content. You can thank me by pre-ordering the book, and I will see you again really, really soon. Bye-bye, everyone. Happy New Year. Bye.